This is day 10 of my series of becoming a profitable trader as a 17-year-old, and in yesterday's video I went over a profitable trade that I took on the euro dollar, and in today's video I'm going to be going over the weekly forecast for three forex pairs, the euro dollar, dollar yen, as well as gold, and I'm going to be going over the economic calendar on Forex Factory for next week's trading week. Let's get right on into it. The weekly forecast for the euro dollar is currently looking bullish. And why is that? If we look at the low of this candle created on April 9th and mark it out with a horizontal ray, we see that there's this liquidity void / fair value gap that price can fill in. And if we drop down to the 4-hour chart and scale down, we can see that this liquidity void is going to be filled in at 108 to 487. And let's look for areas of institutional order flow. And if we use the Fibonacci retracement tool from this swing low to this swing high, and we use the horizontal ray and mark out the 70.5, which is the ICT optimal trade entry, we can see that price can retrace down to the ICT optimal trade entry, as well as this candle created on May 9th, which delineates a bullish order block. And let's get out the path indicator. So price can start consolidating, trade down to this area, and then trade higher to fill in the liquidity void, and that would be the bias for the euro dollar. Then if we go to the dollar yen, go to the daily chart, we see that there is a bearish order block created on April 30th. And we can mark that down right there, and then let's scale down to the 4-hour chart, and we can see that there's this liquidity void that was created on May 1st that price can fill in. And obviously the euro dollar and the dollar yen are negatively correlated, so we expect price to be bearish for the dollar yen, and price could trade up here, fill it in, accumulate, and then it could also trade down to this swing low as well as this swing low below this major consolidation. Let's mark this out with the rectangle. This big consolidation, we can expect price to trade down there and sweep that. So with the path indicator, price trade up to fill in the liquidity void, and then trade lower to sweep this swing low as well as the swing low below this consolidation. And lastly, if we go on to gold, on the daily chart, we see that price is currently at all-time highs and price is consolidating on the daily chart. So we could expect price to be bearish. If we drop down to the 4-hour chart, we see that there's also another liquidity void that price can trade into, created on April 19th, and price could trade up there, start consolidating and accumulating orders, and trade down to these swing lows, as well as filling in this big liquidity void created to reach all-time highs. Let's mark that out with the path indicator. Trade up there, start accumulating, and then trade lower for the swing low down here, as well as to fill in the liquidity void. Then we go to Forex Factory for the economic news. On Monday, there's no economic news, so we can trade on this day. On Tuesday, May 14th, there's PPI, so we want to avoid trading on this day. For Wednesday, May 15th, there's CPI. You want to avoid CPI. You don't want to trade during CPI. So you want to avoid Tuesday and Wednesday. On Thursday, May 16th, there's unemployment claims. It does move the market, but not as much as CPI and PPI. So you can wait like 15 to 20 minutes after news has come out to see if there's trading opportunities. And on Friday, there's no high impact news, so you can trade on Friday. That'll be it for this video, guys. I hope you guys enjoyed it, and I'll see you guys in the next one.